Ladies and gentlemen, welcome back to the channel. Markets are moving higher today. We're going to go over all of the news you need to know and what is happening. But there is something very fascinating that I think you need to know. Obviously, the Russell 2000 is the underperforming index today, only up 0.22% versus the NASDAQ, up 1.62%. Look at this. VIX EQ is actually up almost 3% today. But the VIX is down about 3% today. What does this mean about this market and what could happen later this week? We'll get into that in today's episode. It is a big green flag, if you will, that says stocks are probably going substantially higher towards the end of this week and end of this year. Do me a quick favor, hit the like button, subscribe to the channel, and check out the links down below in the description of today's episode if you guys want to come join the trading community, but more on that in just a few minutes. Ontario's Premier Doug Ford says that Trump is finding excuses not to get a deal. U.S. Secretary of State Rubio and China's Foreign Minister Wang Yi discussed the Trump-Xi meeting. Qualcomm was one of the big winners today. Qualcomm has announced AI chips to compete with AMD and NVIDIA, which is interesting. Mexico's President Sheinbaum says we are close to reaching a U.S. deal on non-tariff barriers, and the U.S. is extending the trade deadline for several weeks. The U.S. Department of Energy forms a $1 billion partnership with AMD to build 2 supercomputers. Mexico's President Sheinbaum says we'll give it a few more weeks to close the issue of 54 pending trade barriers. President Donald Trump said he could serve a third term in 2028 by first running as vice president and then assuming office if the sitting president were to step down. He said, "I'd be allowed to do it," Trump said, "but I wouldn't do that. I think it's too cute." Donald Trump says that he wants to meet with the North Korean leader Kim Jong-un. There is a 34% chance that it will happen on betting markets like Kalshi. More than 1,400 flights are delayed Monday as U.S. air traffic controller absence continues. There's been a lot of talk about the government shutdown, but with EBT benefits expiring and people not able to get flights, you're going to start seeing some real public pushback on the government being shut down. Politicians can play games if they want to. After all, they get paid. The military might not get paid. You might not have food, but Congress gets a paycheck regardless. But once you start to get people pushing back, once it starts to, disrupt more people's lives, it's only a matter of time. The clock is ticking to get the government funded. And that could be a positive catalyst at some point in the near future that could move markets to the upside. Auto loan delinquencies have surged to their highest level in 14 years per Fitch. The CNN Fear and Greed Index today is coming in at 37. Market momentum is extreme greed. Stock price strength is fear. Stock price breadth, extreme fear. Put and call options in fear. Market volatility is neutral. Safe haven demand, extreme fear. Junk bond demand, currently in extreme fear as well. Now, as we talked about last week, which I know service is not great. We are in the Kentucky area. I don't know. There's not good service over here. But the AI Investor Sentiment Survey is at about 44% bears, only about 38% bulls. So you still have a majority of this market that is more bearish than bullish, which is typically a green flag to be investing in stocks. And if we actually take a look at the VIX EQ today, the VIX EQ measures single stock volatility. It's actually going up. Okay, it's up almost 3% today to 41.25. Okay, you're at about 50% of the fear level in single stocks as you were during the, or 60% ish of the total fear you were at in early April. Okay, so people are still pretty fearful right now. Look at the VIX. The VIX today is actually down 2.5%, and the VIX is at recent lows. Okay, so what does this mean? This means people are really nervous about earnings. okay? People are really nervous about earnings, specifically AI and hyperscaler guidance, okay? You have to imagine the single stock volatility that is so elevated is around the hyperscaler earnings because they control like 30, almost 40% of the S&P. So that's really where you'd get the nervousness, right? On an equal weighted basis, like the VIX is, the VIX EQ at least, the volatility, the nervousness is all around big tech earnings. Now, we're going to have big tech earnings Wednesday and after hours really with Meta, Microsoft, and Google, and then Thursday and after hours with Amazon and Apple, okay? Once you get these earnings out of the way, you are going to see a volatility collapse, a vol collapse. And what that is going to do, let me give you a little bit of a secret. It's going to force algorithmically or from an actual human perspective to go out and buy stocks again, to go out and buy a bunch of stock. Why? Because when volatility increases, hedge funds, institutions, a lot of the time it's their algorithms that go out and sell stocks, they short stocks, and they hedge their portfolios, okay? Retail's version of risk management is we go out and buy the dip, okay? But after earnings, after people realize, oh my gosh, there's not a collapse in AI guidance, companies are doing very well. You're going to see that volatility collapse, and that's going to trigger buying on a massive degree. Now, Wednesday is also potentially going to be a big day because we get a Fed rate cut. And as JP Morgan and now other banks are suggesting, we could actually see the end of QT. So that's also bullish. Now, personally, I expected today was going to be a good day. Tomorrow could be a little more 50-50. Again, we do have some earnings. You have SoFi, PayPal, UPS, HSBC, JetBlue, Royal Caribbean, Wayfair, and some others, and then Visa and after hours. We're going to learn more about the consumer, and that's all great. But Tuesday, people could be a little bit nervous right before big tech earnings. Again, you're seeing the equal weight VIX going up today. People are clearly nervous around earnings. Okay. Wednesday in the morning up until 2 p.m., I expect some nervousness as well. Following the Fed at 2:30 p.m., Jerome Powell is going to get on the podium and give his, speech and take questions. I expect a rally after the Fed, which leads into hyperscaler earnings, which is likely going to lead into a good Thursday. Then once you get earnings on Amazon and Apple, Thursday and after hours, Friday is when this rally really gets going. Okay, so you haven't seen shit yet. Friday is when volatility collapses and the buying really starts. Now, I actually want to share with you guys a post that I made in the trading community last night at 8:16 p.m. that will help you understand what's happening in markets and just put it out there why I think right now is a good time to be bullish. Okay, now I understand the risk on areas like the IWM, perhaps where a lot of you guys are investing, it's not doing the greatest today. And then there's a reason for that. It's not down, but it's significantly underperforming something like the NASDAQ. This will help all of it make sense. I wrote at 8:16 p.m. last night why the stock market is about to rally hard into year end. 1. Single stock volatility measured in the VIX EQ is about 50% of the peak back in April. The VIX is back to lows. This is a record spread of fear in single stocks versus the index. This means investors are nervous about single stocks, likely because of earnings this week from the Mag 7 and concerned about AI guidance. Again, the VIX EQ, it's measuring single stock volatility, but these single stocks, like the hyperscalers, the Mag 7, they comprise a large chunk of the S&P, so a lot of even that index is still coming from the Mag 7. Now, I say there's nothing to worry about there. Companies are fighting to stay relevant. They have no choice but to spend more and more on AI. Hedge funds and institutions, they sell stocks and hedge as volatility goes up. I know, it's ass backwards, but it's their version of risk management. Retail's version is buying the dips. So as single stock volatility collapses late this week, it will trigger massive buying pressure. Number 2, Fed meeting on Wednesday. Fed fund futures markets are pricing in a cut at every Fed meeting from here into January 2026. 3 cuts total, and JP Morgan expects the Fed to end QT this week. QE, the opposite of QT, is the practice of the Fed buying assets like treasuries on the open market to control yields and keep them low. This started after 2008. This is because the Fed is only able to control short duration bonds, like the 1 to 3 year bonds, with interest rates. If they want to get long bond yields lower, which determines things like mortgage rates, they typically have to buy them. QT is the practice of selling the bonds the Fed bought with QE. So if QE causes bond yields to stay low, QT causes bond yields to stay higher. So if they end QT, that's less pressure keeping bond yields higher, meaning bond yields will probably trend lower. This is because the bond coupon itself is fixed. Think of a dividend stock that never changes the yearly payout. The payout yield changes when the stock price, in this case bond price, changes. Historically, QE is very positive for stocks, and ending QT should help bond yields fall and fuel this market to the upside. Number 3, Trump-China meeting is set for Thursday. It looks certain that the 100% tariffs are not going to be going into effect. And the bad news about Trump canceling trade talks and raising Canada tariff rates is likely coming to an end soon as well, since Canada paused the Reagan ads. This will be positive, and futures are reacting to this now. Number 4, historical data. Since 2012, the S&P has gained 4% in the last 10 weeks of the year. With this setup, the rally could be much more dramatic. Conclusion: Monday is probably really green. Tuesday could be mixed. Wednesday could be mixed until 2 p.m., then expect a rally post-Fed. Thursday should be good following Meta, Microsoft, and Google earnings. Apple and Amazon report Thursday p.m. Friday, this is when the rally kicks into high gear heading into the following week. Obviously, I could be wrong, but this looks like an easy call to me. So I'm not exactly shocked that the Russell is lagging today. The S&P and the, QQQs are doing better, because this volatility, as single stock volatility goes up, hedge funds and institutions, they sell, they short, they hedge in the riskiest high beta stocks, okay? If you're a hedge fund or institution, would you rather hedge your portfolio in Apple, or would you rather hedge your portfolio in RZLV or Poet or a biopharma? Okay, you would rather hedge in something that has a higher beta, because instead of maybe needing to short $1 billion in Apple, maybe you only have to short $300 billion in RZLV that has a beta of 3 to the S&P. Okay, these are very simplistic explanations, but it helps to understand why there is this risk on underperformance today. Now, when volatility collapses, when there is less of a risk profile and less major risk events on the near-term horizon, you're going to see the risk-on areas of this market surge back to life, okay? That's what is going to happen, in my opinion, by the end of this week. There's no other way around it, unless we are surprised or shocked in some way by Mag 7 earnings. If they say anything, negative about AI or about CapEx spending, which I view as very unlikely at this point, the only other alternative is a volatility collapse in single stocks, which fuels buying pressure, let alone a Fed rate cut on Wednesday and potentially the end of QT. That's a very positive setup, mixed with a potential trade deal with China and getting back to talks with Canada. Hopefully you can see why the risk reward, while not 100% guaranteed, looks pretty damn certain to me that we get a rally into the end of this year. Now, tomorrow in economic data, we will be getting something, and it is the S&P Case-Shiller home price year-over-year and month-over-month. It does feed into inflation a little bit. Now, inflation we got on Friday looked really good, so I don't think markets are going to react too much to it, but we should be getting the Richmond Fed manufacturing shipments, Richmond Fed services revenues, Dallas Fed services index, and Dallas Fed services revenues. We will also likely, I'm not 100% sure on this, be getting the 7-year bond auction, which again, the Fed doesn't control the longer end bond auction, so it's going to tell you a little bit more about demand for bonds and maybe where yields are going. Okay, that's going to be important as we get into Wednesday. You can see 10-year Treasury yields today are basically unchanged. at about 4%, almost exactly 4%. Oil up just a little bit. Gold is down about 3% today. Again, gold is kind of seen as one of these risk-on assets these days with the rally that we've seen. So again, with VIX EQ rising, I'm not shocked that certain assets that have done very well recently are selling off in favor of more of those stable, growth assets, okay? VIX EQ continues to climb. It's now up over 3% today. And again, just to show you guys this, over the past year, the VIX EQ hit a high of, call it 70 on April 8th. Today it's at 41.39. Take, September 2nd for an example. That's just the day I've continued to point to. The VIX EQ was at 31.67, okay, on September 2nd. So a lot lower than where it is today. It was lower by like $9, call it $10 or so. The VIX, again, hit a high of about 58, 52 on April 8th. On September 2nd, the VIX was at 17.17. Today it's at 16.03. So the VIX back on September 2nd was even higher than where it is today, right? Almost $1 higher, but yet the VIX EQ is $10 higher. You've never seen a spread like this with so much fear in single stocks and so little fear relative in the VIX or the headline S&P. So again, what that's telling you is people are nervous about earnings. Once you get these event catalysts out the way, it's going to pave the way for risk on to emerge and start leading this market again, mixed with a Fed rate cut, very seasonal activity. You really don't have a choice but to be bullish right now. But if you wanted to pick a day, Friday is when the rally really starts, okay? I don't really care what happens between now and Friday. But after we get earnings, after we get the Fed, after you see volatility come down, either way after earnings, volatility is going to come down. And just from that perspective, again, volatility goes up, hedge funds and institutions, they get scared, they start to sell, right? Volatility is going to come down after earnings regardless because we have certainty. And that's going to fuel buying pressure, let alone if the Fed is bullish or bearish, let alone, what happens with Canada or China, which looks to be on the positive side of things, I guess you could say. So either way, you're setting up for very positive catalyst. But I do think the Fed is going to be a positive. I do think the Trump-China meeting on Thursday will be a positive. And seasonals don't lie. So, yeah. There's a very strong bullish case right now. Although not guaranteed, that is definitely the direction I am leaning. So that is going to do it for this video, ladies and gentlemen. We have a lot to cover later on today in regards to Resolve, in regards to Poet, some of our favorite stocks recently. Both stocks have some news today that we need to cover later on in the next video. So stay tuned to the channel for that one. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys want to come join us in the trading community, check that link out down below, where we are again going out and finding these under the radar AI, robotics, energy companies, you get the idea, and investing in them. We want to find the next big winner before everyone loves it, okay? That's where you really amplify those upside returns, and in my view, you lower the overall risk profile because in theory, you're investing in high quality companies at lower than hype valuations, if that makes sense. So have a great rest of your day, and I will see you in the next one.